Always good to have you on the show, Kyle. Welcome back.
Thanks, Sarah. Good to be here.
I have to give you some credit because I was looking back on some of your prior interviews. You were on with us in January talking about expecting very high oil prices to surpass $100, which people weren't actually talking about back then. And it wasn't on a war in Russia and Ukraine. It was just on the demand and the opening up from COVID. Now that we are seeing this huge supply shock and moves like today where the U.S. is banning Russian oil, where do you think we're headed next?
Yeah, I think this awful war was just an accelerant to kind of the fire that was already burning on the oil supply side. Again, with 7 years of significant underinvestment in our kind of immediate desire to switch to alternative energy, we made some really bad policy decisions over the last 7 years. And I think that high prices, again, Sarah, will end up solving that because it'll be a call to arms to have people realize that maybe we need the Keystone Pipeline. Maybe we need to invest more in safe hydrocarbon production in the U.S. and domestic hydrocarbon production as we transition to alternative energy, call it wind, solar, and I think small modular nuclear. These transitions take 40 to 50 years, right? We're only 3% alternative energy, and we've been all in for about 12 years. So we all want to effectuate this overnight, and what we're realizing is this is a very long process where we need to be deliberate and thoughtful about how we transition. We can't just flip a switch.
To be fair, it wasn't just policymakers. Investors were demanding these kind of changes from these companies as well to announce all sorts of ESG policies and crack down on spending to get their finances in order. This is a very different world. It's easy to say in hindsight that these companies should have been doing that. So are you a buyer of energy stocks?
No, I mean, I think in the long run, owning hydrocarbon production, owning royalties, owning things like that is going to be a very lucrative business. I think that you're going to see hydrocarbon growth until at least 2035, somewhere 2040. We're still going to see incremental hydrocarbon growth annually. And we better start doing some significant domestic drilling, right? The decline curve itself has about a 6 or 7% decline annually. So the world needs to replace 6 or 7 million barrels a day each year just to tread water. So we really need to invest some more there, Sarah. But I think this war has really exacerbated the structural deficiencies that we have. I'd love to switch gears and talk about sanctions if you'd like to go there.
Sure, go ahead. What's your thought on sanctions at this point?
I think I've done a lot of work on sanctions. I helped develop a sanctions compliance plan for the largest public endowment in the U.S. back in 2018. When you look at primary sanctions, when you look at entities and individuals that the Treasury decides to sanction through OFAC, we have to be willing to go the full mile. And what I mean by that is when we sanctioned Iran back in 2018, we knew the Chinese banks were still processing payments to these sanctioned Iranian oil companies. As we sanction Russia today, we know that when we took Visa and MasterCard out of Russia, they immediately went to the Chinese UnionPay and Alipay, and the Chinese banking system is giving them the workaround. We have to be willing to sanction those secondarily that help the people work around, that help the Russians work around the primary sanctions. I think if we're going to use sanctions as the tip of the spear of our economic war, if we're not willing to go into a kinetic war to save the people of Ukraine and the democracies of Europe, then what we must be willing to do is secondarily sanction the bad actors. What we're seeing today is a bifurcation of the world between, call it the axis of evil, which is China, Russia, North Korea, Iran, and the other bad actors of the world, and the rules-based West. So what we're seeing today is a tectonic shift. What Putin has forced Wall Street to kind of rethink is Wall Street's love affair with basically helping build the despotic dictatorships of Russia and China. So I think you're going to see much larger shifts here in the future.